Subscribe to Bisbo and press the bell icon. See boring news turn into enjoyable stories. This video is very special since we will be gifting all of you free shares of Apple. This is a mega giveaway, so don't miss this opportunity. India may be 75, but the rupee is 80 against the US dollar, that is. When India was born in 1947, the pound was the world's most important currency, and it took 13.37 Indian rupees to make each pound. At that time, a 1940 agreement between the US and the UK pegged the pound to dollar rate at $4.03. So dividing the two ratios, we indirectly get the value of the rupee to the dollar. Trade to and from India was conducted entirely in pounds at that time, so India had no need for dollars really. By the time it became a republic in 1950 and the Indian constitution came into existence, the UK itself was having to come to terms with the mounting debt suffered during World War II, forcing Sir Stanford Cripps, the Chancellor of the Exchequer, in September 1949 to
devalue the pound by 30%. £1 will now be $2.80.
This led India to peg the rate at 4.75 rupees to the dollar, where it stayed until 1965. The exchange rate is simply a reflection of the demand for the dollar against a particular currency. And India began to need dollars because in the intervening years, the US had overtaken the pound as the preferred currency. The 1960s was a particularly tough decade for India. It fought two wars, one unsuccessfully against China in 1962 and a successful one against Pakistan in 1965. This was followed by a bitter drought which forced it to import wheat from the US under the infamous PL 480 scheme. But things were about to get a lot worse, and in 1973, the world got an oil shock, where the price of a barrel of oil tripled overnight from $20 to $55 and then doubled again briefly to over $100 in 1979. India needed more dollars than expected, leading it to keep devaluing its currency over the years. It was a situation they never recovered from and could have gone the Lanka way had not Prime Minister Narasimha Rao and his Economic Minister Manmohan Singh not liberalized the economy in 1991. Liberalization also meant that the rupee was left to float and find its own value. The rupee that had artificially been pegged to the dollar at 17 rupees 50 pre-liberalization quickly and steeply devalued, losing half of its value within 6 years to 35.43 to the dollar in 1996. But here's what's interesting. The rupee may have fallen in value, but Indians were much better off. Age-old Ambassador and Fiat cars were replaced by modern cars. The monopoly of Doordarshan, India's government-controlled TV channel, ended, and India rose as a software powerhouse. By 2019, the rupee halved its value again to 70.39 to the dollar, but Indians were still even more better off. Its GDP rose to become the fifth largest in the world in 2019. Foreign exchange reserves crossed $300 billion in 2019 from almost zero pre-liberalization, and India's poverty levels dropped from 36% in 1991 to 20.8% in 2019. So you see, the fall of the rupee against the dollar is not really a bad thing by itself. That is the main thing to remember. In fact, do you know that as an Indian investing in US stocks, you can take advantage of the dollar's appreciation against the rupee, getting the upside on both stock appreciation as well as rupee depreciation. For example, if you were to invest in a US stock and its price appreciates by 12%, and during that same period the dollar as a currency also appreciates by 3%, then your total return on investment is actually 15%. We all regret not buying good stocks 5-10 years back when they were cheaper. But due to the recent correction in the US markets, stocks of amazing companies like Google, Tesla, Amazon and Apple are all available at a very good discount from what they were just a few months back. And since the US stock market allows fractional investing, you can become a shareholder of these companies by investing a really small amount. But how can you invest in US stocks from India? Use the InMoney app that lets you invest in US stocks without any commission, brokerage, account opening or maintenance fees. InMoney also helps you to invest in US stocks via SIP mode. You can start a monthly or weekly SIP in your favorite US company with as low as 500 rupees. Now for the mega giveaway. Just sign up on InMoney from the description link, and when you fund your US stock account, you will get Apple shares worth 750 rupees for free. Start your US stock investment journey with InMoney now. From just a user of Amazon and Google, now become their shareholder. The rupee will always have a weakening bias against the dollar, as India is a current account deficit country, meaning that the demand for dollars is constantly outstripping supply. Capital flows do come in and cause the rupee to firm up occasionally, but some of it is hot money. Anything touches it, it goes, especially investments in the stock market. Since 2019, the rupee went from 70 to 80 to the dollar, but our reserves doubled to over $642 billion, among the fifth largest in the world, resembling almost a war chest, meaning something which can be used during tough times, like a financial war. And the RBI did precisely that, selling $41 billion of it to defend the rupee, creating more dollars in the market. The RBI doesn't mind a falling rupee, so long as the fall is not too sharp or too sudden. It prefers the rupee to slide gradually.
We do not have a level in mind, but our endeavor is to ensure there is orderly evolution of the rupee in both ways.
Countries like Pakistan and Sri Lanka are in dire straits because, among other failings, they kept their currencies too strong for too long, rendering their exports uncompetitive. Ever since the US Federal Reserve announced the end of quantitative easing after COVID and followed it up by hiking interest rates to tame inflation, foreign funds left emerging markets like rats deserting a sinking ship, pulling out over $31 billion from the Indian stock market, as well as removing money from debt and mutual funds. After the Ukraine war, a barrel of oil that was range-bound at around $60 suddenly spiked to $130, while India's penchant for gold never seems to cease, straining the demand for dollars even further. In 2013, when Raghuram Rajan took over as RBI governor, the rupee was in a free fall, breaching the 68 to the dollar mark during the taper tantrum of 2013. He got NRIs to invest $34 billion in 3-year FCNR bonds and successfully strengthened the rupee. This time the RBI has taken other measures as well to ease the pressure on the rupee, doubling the annual overseas borrowing limits for companies to $1.5 billion, temporarily allowing banks to give NRIs higher interest on dollar FCNR deposits, eased rules for foreign investors to invest in government and corporate debt in India, exempted banks from maintaining a cash reserve ratio on new dollar deposits, raised import duty on gold to make it more expensive, but that will surely lead to increased smuggling, and permitted international trade to be settled in Indian rupees that could lead to annual savings of $30 to $36 billion, bypassing sanctions on Russia and Iran, from whom they have been buying a lot more oil since the Ukraine war, with imports averaging almost $2.5 billion per month now with Russia. However, in this episode of Kaun Banega Crorepati, the dollar has strengthened against all currencies and the rupee is among the best performing, depreciating just 7% this year while others lost 13%. As a result, the rupee has strengthened against all the others. But India's real effective exchange rate, measured by the 40 currency basket favored by the RBI, is still overvalued by 4%, which means the rupee should really be around 83 rupees to the dollar. In previous crises, the dollar appreciated more against the rupee. So a more long-term solution to correct the balance of payments, which in the April-June quarter of 2022 had a record trade deficit of $70+ billion, is to increase service exports, which have been steadily rising year on year. However, this crisis is temporary. FPI, FII, venture funds, Make in India and PLI will start coming back at some point. India's GDP will rise and their foreign exchange reserves will slowly climb to the magical figure of $1,000 billion, 1 trillion, even as the currency slowly depreciates to 100 rupees to the dollar. Bisbo's limerick. Let's talk a bit about the mighty dollar, leaving other currencies behind in relative squalor. But in this dichotomous tryst lies an amazing twist, cause the rupee at 80 is in no way getting smaller. You will also find these sources listed in our video description section.